Thank you all for being here. Hi. It is November 3rd. I am Crypto Jack. I'm here with my Tradingview mug. We're going to look at some very interesting things today. Got a lot of content for you guys. Hopefully we can get through it all at a fairly quick pace and in a way where you guys can engage and hopefully help you, educate you a little bit. Tonight is the U.S. Election, or the start of where the votes are tallied for the U.S. president. So, there may be some updates through the stream. This is not a political stream by any stretch, but this is a pretty big deal. And I think whoever wins, it will have an impact on the markets. I don't think long-term it will change the trajectory of Bitcoin, but I think I'm going to compare a few things, and discussing politics will have to be a part of it. But I'm never going to tell you, you must vote this way or another. So that's not what you're going to hear from me. So let's kick things off. Why do I have Bitcoin pulled up on this chart with a little line drawn on November? Well, it's supposed to be November 3rd, but November 3rd of 2016. Great question, chat. And this is why you guys are here. I love it. I love it. You're bringing the fire. I love it. So at this point right here where I'm circling, where this line is, right? This little guy right here, I'm going to go ahead and delete it so you can look. This is when the presidential race was coming to a conclusion between Donald Trump and Hillary Clinton. And if you recall, and some of you guys may not know, but what happened was it was an easy win for Hillary. Easy. Why do you have it? Chat text says, why do you have a line drawn on November 16? Yes, great question. I'm glad you're asking. So Hillary Clinton was a shoo-in at this time. So all of a sudden, let's see, there was even articles put out. Okay, a few days later, Bitcoin price at $732 as Clinton campaign says it will not concede the election tonight. Okay, so even after a lot of the results were coming in during this period, the votes were swinging from Hillary to Donald Trump, and there's all kinds of speculation as to what happened, Russian interference, blah, 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 all this stuff. Forget all that. Forget all the noise. Let's see what Bitcoin was doing at the time, because this is especially interesting to me. So at the moment, we're going to switch to a very macro broad view here. Hang on. Okay. Bitcoin had just had its halving July of the same year. Okay. July of the same year. Back to our chart. Back on the daily. Okay. Scooching our way back down. Okay. So again, we are back here. We're getting election results during this period. Everything was crazy. No one knew what was going on. Everyone thought Hillary Clinton was going to win. All the markets had priced in Hillary winning, and all of a sudden Trump was winning. People went nuts. There was lawsuits. There's all kinds of things. There's fear, uncertainty. No one knew what was going to go on, right? So I'm seeing a lot of the same stuff. Now it's packaged differently, but it's still the same charade. It's the same thing going on. We have some crazy bullshit going on between two people. We think one guy's going to win, but really it's kind of a coin toss now. One guy is strongly for this stuff, another guy's strongly for that stuff. They're polar opposites of each other. The world will never be the same depending on which one wins for the next few years. But this is the exact same thing. Again, the halving was in July. So the halving was right in here. We had a strong rally, a sell-off, and then we were just in this kind of slow, grindy up thing. And then all of a sudden, in the last 2 weeks, starting from December 21st of 2016 and ending a few days into January, Bitcoin rallied from $790, breaking out of this kind of slow and steady Eddie uptrend, all the way up to its prior all-time high, which was about $1,160. Okay, and that's what this horizontal line is. See, I've just drawn it straight from the prior top, straight horizontal over, and you can see just after the election, the final couple weeks of December, we shoved up 40 whatever percent, call it 45%, and we knocked the prior all-time high before a nasty sell-off. And we'll kind of get into this in a minute, but I don't want to analyze the structure of the move too much. I just want you to get your head around the fact that a lot of time history repeats itself, just flat out. And what we're seeing, I think, is probably a lot of the same thing. Now, it's not going to be identical where, okay, this day went up 5% and down 7% and up 3% and down 4%. Like, you can't just go, you know, with a microscope and see. But I think in broad terms, you're going to see a lot of the same things because human psychology doesn't change. For example, you can make the case that, well, yeah, we were kind of up and sideways because people were positioning for a macro long, but a lot of the speculators were not entering the market until they knew what was happening in the traditional markets. And people didn't know what was going to happen with traditional markets until the US presidential race concluded. Now, that's me speculating, but I'm saying that is a speculation to what happened before, and I could see something like that happen again. In fact, let's put today's date side by side with that period of time back then. So that is what I've done. I have overlaid this period of time right on top of each other. You can see, like, for example, this right here is September 3rd. There was some volatility. Again, September 3rd, the exact same thing, some volatility, but not on a daily view, like under the microscope, but just very broad brushed macro, what's going on. It's just, this was this slow, steady Eddie uptrend until it finally broke out. Okay. And look what we're doing again. Just this kind of slow, steady Eddie uptrend. You know, we're making 1 to 2% highs every day or two. And that tweet about Hillary not conceding to Trump, that occurred right here. That's why I marked this. So you can see, even during all this volatility with who's going to win the election, we don't know. Trump is sweeping it. Oh my God, I can't believe Trump's winning. Does he even know what he's doing? Everything's, you know, we're all going to fall apart. It should have been Hillary's party. La, la, la. Everyone going crazy. Meanwhile, Bitcoin's just slowly accumulating before it finally popped in the 3rd week of December. So we're going to watch. We're going to see if the same thing happens. It's going to be very fascinating if it does, because we have other indicators telling us that something may be happening soon. For example, one of my favorite things to go back and look at, let's compare Bitcoin with what, where are you? Litecoin USD did. Oops. Nope. So we want Bitcoin. All right, so Bitcoin, as it broke toward its all-time high, I'm making a point here real quick. Hang with me. So after the election, which was this little, I'm going to kind of circle this as like the election volatility or whatever you want to call it. After this period of time, it broke up. And let's see, again, I've pointed this out many times, but let's look at what Litecoin did at the exact same time. You can see Litecoin spent, let's see, from July of 2015 to almost July of 2017, almost 2 full years, it accumulated within this particular price, you know, consolidation pattern. And then right as, get this where you guys can see, okay, right as we were attacking the all-time high and then breaking up from it, Litecoin breaks up or breaks out of its consolidation wedge. So Bitcoin is breaking to new highs and it goes on to, you know, on its way to 20K. Just at the exact same time, Litecoin is breaking out as well. So the theory is, well, maybe Litecoin, and so hang with me, tell me if you understand this. What I'm speculating is, if Litecoin consolidated and broke out, I wonder if that could tell us kind of where we are in the Bitcoin cycle. So we have the election here, and then we have a Litecoin consolidation and a breakout here within about 6 months of each other. And between the election and the Litecoin breakout was Bitcoin hitting its all-time high and struggling with it a few times. So let's see where we are today. And this is the prior all-time high here, about another 30 to 40% above where we are, just like where we were last time in the last election. And let's see where Litecoin's doing. Oh my God, it's doing the exact same thing. Okay. So not only are we getting some of the same, you know, feels like sentiment that we had during the last election, but Litecoin itself is signaling that something's about to happen. Now, we hope that it breaks up and everything breaks up with it, but let's be real. That's just a hope at this point. We don't actually know that. But it's a pretty strong indication. Also, and I kind of breezed over this, when Bitcoin broke up back in 2016 in the 3rd week of December, and over 2 weeks gained 46%. I mean, look at that. It's crazy to attack its prior all-time high. Let's see where we are in our cycle to see if another similar move would do the same thing. So let's do the exact same thing here. We're going to get a trend line. We're going to draw it over, and let's see how far we might be from that trend line. So from here, we're 40%. So I mean, history doesn't always repeat itself, but it often rhymes. Like, you probably heard that, especially in markets, because a lot of it is, a lot of it is crowd psychology. It's just how people react to stuff. So this is going to be very interesting to see what happens with Bitcoin specifically. So we may get something like this and be looking back at it and laughing and saying, oh yeah, I remember when Bitcoin was only 13,800 and, you know, Joe Biden and Trump were slugging it out for another week or two to see who actually won. But what I'm suspecting is that things are not going to be as bad as everyone's hoping. Another thing, and I meant to pull this up ahead of time. How do I word this? Let's see. All right, so, all right, this is new. Okay, and I want to make, this is a part of what's going on macro wise, I believe, I think, right? This is, we're speculating, we're reading the tea leaves and, you know, looking at the crystal ball. So Phoenix protesters hit with charge of assisting a street gang. All right, this is very quietly making news cycles, and you actually have to go out of your way to find it. But what the federal government has done, and I'm going to change the page because it's like super bright in my eyeballs over here. But what the government has done is said, if you are a part of these Antifa riots, that you will be considered a gang member and federally charged with a felony as a gang member. So the federal government is done. Like, okay, you had your fun, you burnt your businesses, whatever. But that's it. And as I heard a friend of mine call it, that is the beginning of the end. That raises the bar for a lot of these rioters to a level where they're not going to mess with it. It's not worth it at that point. They're not going to just get, you know, a little slap on the wrist, catch and release, that kind of BS, like what's been going on with Portland. So we're going to have, there's no more volatility. I'm speculating like a week or two from now, or, you know, a month from now. There will be, at least at the minimum, a reduction of these riots and businesses burning. So that is fear leaving the market. You will have some certainty about what the next 4 years will hold with the presidential race, one way or the other, right? Who knows who it's going to be at this point, but you'll at least know, and big money can position themselves. And number three, regardless of what happens, there's going to be inflation issues because we've already rubbed that lamp and the genie's out of the bottle when it comes to inflation, in my opinion. And that is a perfect segue. I'm really good at this, by the way. Hi, professional streamer here. That we're going to segue into my inflation discussion. So before I do that, does anybody have any questions, comments, concerns, anything like that? Because I will be happy to get into it about what we've just talked about. If something didn't make sense, whatever, let me know. I know I flew through some stuff pretty quick, but the bullet points to all that is, I think we're about to get some pretty serious Bitcoin volatility near the end of the year. So I'll give it a minute, 30 seconds or so. I know some people have told me that because of the quality I stream at, there's about a 10-second delay at some points for them. So I like to I'm burning a little clock. So if anybody's got any questions or whatever, let me know. Once you make, I'm an affiliate, but once you make Twitch partner, you can actually, like, my audience gets the ability to change the the source, like what kind of pixels, whatever it does. So you can do it a lot lower and there's less latency. All right, Tex asks, what triggers a breakout of the channel we are in? So what happened before, and I think you're talking about Bitcoin specifically, Kabina, you're next up. But what happened before is, like, if I put this on the 4 hour, let's look at the 4 hour back at this same kind of election time. Now, it actually made a really nice macro rising wedge, which this actually has. This is funny. This is a really funny pattern, and I'm going to delete this just for a moment. And what's funny about this is every pattern, and you can actually look all these patterns up, every single pattern has a percentage of breaking down and a percentage of breaking up. And it's based on like market averages and stuff like that, where they sample a gajillion assets, and on average, like, you know, X% break down for this particular pattern, X break up. What's funny is this particular pattern, it's like 65 or 70% to the downside and say 35 to 30 to the upside. So a lot of people were expecting this. They're like, oh, we're breaking down, we're gonna go back to 500. And I know, because I was one of them. Oh my God, I sold so much Bitcoin right there, and I regret the hell out of it to this day. But that was me. I was kind of during this period. But that also adds fuel to the fire, because a lot of people are shorting. Oh, we're gonna go down. We're gonna go down. Everyone be scared. You know, we're shorting. And then it starts going up, and a break to the upside is crazy, because the market had all the time in the world to break down. And especially on a macro pattern like this, where it was about a month and a half of consolidation. So it could have broken down. It didn't. Once it showed it was not going to, it is serious. So back to your question, what about now? Which is what you're getting at. And I'll get into this small time frame here in a little bit. But what Tex is referring to is what I tweeted out earlier. There's a little bit of a channel that we are watching. And just as a quick reminder, when it comes to trading channels and stuff like this, you got to remember, like trend lines, the market doesn't care about your trend line, but they do tend to care about zones. So you think of it like this, like this is the sell zone. This is the buy zone. Oh, buy. And everything in between is the hands off. You don't touch it. You don't buy or sell. I mean, you can if you're like a degenerate day trader, whatever, sure. But you really shouldn't be messing with it in between. So thinking of it like that, like in that lens, we have people just buying and selling. So what I think it's going to take is another macro trend, just like we saw previously. And how that forms, I don't know. We could have another rising wedge, which I think you could probably argue we're at the early stages of. And remember, we need to make this, if it's going to do like it did before, we're going to end up doing this dance out till late December. But let's just speculate here. So this puts us into late November, and then a breakout would be somewhere in like the first part of December. So maybe, but odds are we're going to form something very, very clear. And like maybe it has a breakout and then continues, you know, and forms something we can't even see yet, or we're not even able to do trend draw quite yet. So we got to keep our eyes on it. But for now, it's really just in the hands of swing traders, where they're happy to use margin and make a 5% move. You know, okay, they sell, then they buy down here, they let it ride another 5%, then they sell again. So they're making 5%, 10%, 15%, 20% times whatever their margin is, and they're content with that. They're happy with that. So I think it's going to take, this is part of my, at the core of my thesis. Okay, so hear me when I say this. Long-term Bitcoiners are very much interested in buying in here, but speculators are probably not, because they're not even in their macro stocks yet. They don't know who, if it's going to be Biden or Trump. They don't know if they want to be renewable energy or the fracking guys or what. The traditional markets need to settle down, in my opinion, and then it will be risk on at that point. All of a sudden, everyone who has been like scared of taking risks with their money is now saying, okay, whew, I have 75% of my traditional money, like my pot that I'm managing for hedge funds or whatever, that pot is deployed in my traditional markets. And finally, like, okay, now I can even think about the quote riskier trades, which Bitcoin falls within that. So if just the traditional guys, like if just the OG Bitcoiners or the maximalists like me and probably like some of you here, if our purchases alone, along with some other speculators, right, but a minimum amount, if we have brought the price to 13.9, what happens when the actual Wall Street big dick size, like Scrooge McDuck with a vault full of cash size guys come in and say, you know what, now we're willing to bet on the next 4 years on Bitcoin? Like, that is what gives you those 30 to 40% runs in a few weeks. But I don't think we're going to see that until end of December, early January. One, for tax reasons, because big boys are always thinking about end of year taxes. And number two, because they can't even enter their own traditional markets yet. They don't even know what's going to happen. And there's still a lot of fear in the traditional markets. So I think that stuff's got to happen. That's got to settle down. And then we get speculators entering, and then we see some fireworks. So it's like a 1, 2, 3 combo. Presidential race, people enter their, you know, bet on their horses in traditional markets, and then they can gamble, right? Which is, and most people who are not, don't even understand what Bitcoin is or what solutions it actually solves. They just see, a weekly chart of Bitcoin, and they see news articles about like how other people are in it, and they're like, all right, you know what? Screw it. Let's just, yeah, okay, let's go for 100x. YOLO. And that's good enough. I mean, that helps people like us who've been in it for a while, but we don't have those people yet. There's too much fear in the markets. We don't have a lot of those people. Not enough. All right, so Kabina, you said, do you think ETH is going to follow the same tendencies? Generally interested in how do you think other cryptos will play along Bitcoin? Yes. Okay, so this is one of my favorite things to cover is Bitcoin chart. Here we go. So Bitcoin underwent what is considered Wyckoff accumulation for about 8 months. So it was from December of 2014 until its breakout in October of 2015. Okay, and Wyckoff accumulation is a sign of big money entering a position. So it what happens is, oops, sorry. You have a significant downtrend. It went from 1200 all the way down to 150. So like an 85 to 90% downtrend, and followed by essentially sideways. Now what's actually happening is whales are buying in here and preventing the price from leaving a certain range. So they're gobbling up everything in here. And in fact, they're part of the sellers. Like they're like, nah, you ain't leaving here because my pot is not big enough. So they buy, they sell, they buy, they sell. And then what I love to see, this doesn't always happen, but in before some of the biggest up moves in history, you'll see what's called a terminal shakeout or a spring or whatever, and it's a big nasty sell-off that scares the hell out of everybody. And it's like, if you waited through here and you're like, well, I think I'll hold it because I think it's going up, and then there's this sell-off and you're like, all right, fine, I'm done. You know, that was a year. I've held a year and it's dumped, and all my friends were right. I'm stupid for even being here, right? And so that's kind of what happens, is there's all this fear during these down moves. And the whales are like, yeah. They're the guys on CNN like, oh yeah, you're gonna lose all your money. Please sell. You're an idiot. Please sell. Like JP Morgan Chase, they're famous for doing this. And then next thing you know, like 2 weeks later, oh, it mooned. And it's not just that it pulled a 2x. It's that the whales are positioning for a 100x move, which is literally going from down here to up here. This is their play. 100%. They know what they're doing. Day one. Okay. But why I bring that up? If we look at the total market, the total 2, which is the crypto market cap, that is not, it's all crypto markets, not including Bitcoin. Not including Bitcoin. So everything else, Link, Ethereum, you know, Neo, et cetera, all that, like the top whatever coins, it's all of them that do not include Bitcoin. We can see that they have literally done the same pattern. They've shoved it sideways. They've prevented it from leaving this trade range. And we even have a terminal shakeout before a breakup and a consolidation above the trade range. So the insinuation here is that anything that looks anywhere remotely similar to this pattern, the whales have been accumulating this. And we can expect a sizable uptrend, maybe not 100x, but something stupid. Because you don't spend 2 years accumulating different alts at a certain price level. You don't do that by accident. There is intention behind every one of these moves. So you specifically asked about Ethereum. Ethereum also fits this mold to a T. We even have a terminal shakeout before the breakup and being above the prior trade range. Now, I have to say, this is where I say this is not trading advice. You know, please don't lose all your money. Don't sue me if you do. But as long as this holds above the prior trade range, it is incredibly bullish. It does not have to hold above the prior trade range. For example, TRX is a perfect example of this not holding above the trade range. We watched this for several streams. We asked the question, perhaps this is what's considered a sign of strength, which is like that consolidation pattern that we like to see, because it broke out and above and was kind of consolidating. But the moment that it sold, or that the price started trending back in the trade range, we called it off, which is what this X is for. And you can see it's trending all the way down. Because what happens, the insinuation when you see a chart like this, is that you will get not accumulation, but dun dun dun, redistribution. You do not want to see redistribution. Redistribution means that the downtrend you're looking at is just a pit stop. It is merely a pit stop before we continue down. So I will go ahead and draw something like this, because this is exactly what you'll get. This is what redistribution is. Now, this is TRX on the Bitcoin pair. So this could be doing this for a number of reasons. A, Bitcoin's about to moon, or at least it will outpace TRX, you know, its USD equivalent. So the Bitcoin USD will outpace TRX or the Tron USD. Or TRX is just going to just dumpster dive while Bitcoin is sideways. Anything could happen here. So we will see. NEO has also, unfortunately, broken back into its prior trade range. Now, I'm going to go ahead and put the X because that's the conservative thing to do. We've broken below, we've retested, we're continuing down. If you were in a NEO position, say from down in here, especially the best time to buy is once when there's a sell-off that's re-entered its prior trade range. You would buy in here hoping that you either get a break up and out, or at the very least you get a retouch of up here and you would sell there. So the conservative thing to do is to sell your $7 to $8 longs in this break below. So you're out at 15, whatever, 15.50. That would be the play. Now, there's a chance that this is just consolidating, and this is just a very ugly way of it consolidating. But you don't pray. You don't want to be a long time community member. So you should be out of this position. And if you're not, look for an opportunity to be. And if you want to re-enter, watch for a break above the trade range here and a very clear break of this particular pattern, which could happen. It could break up and then continue out. Absolutely, 100%. But you can't guess that that's going to happen right now. There's no reason to believe that right now. So NEO scary. Okay. Tex Army, whales are the house and the house always wins. Yes, this is why we're here to see. You can't see, like, there's not a spreadsheet that says, hi, I'm a whale and I bought this, but you can see the effects of their movements. You can see what they've done. This is a whale. Whales cause that. The greater market doesn't cause that. The greater market would have already done this. They would have just continued down. Big money is controlling this and causing this. Anyone who's been at least even margin long from any of these points expecting it to go up, they are now underwater and likely sold. That is intentional. They want that. That's how you get these big wicks. And the whales can just nom 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 gobble that up and be the last ones to go long. And you got taken out. So they are a very jealous girlfriend. They're the jealous wife, these whales. They do not want anyone else making money other than them. So that's why these kind of moves are very telling, especially if it can break down and then back up. So break below any of the prior lows and then come back into the trade range. That's a huge bullish signal. Just like breaking above all the prior highs and then breaking back down is very bearish signal. It's very bearish because anyone who's been short from these positions, betting on it going down, they were underwater and buying. And now anyone who's got a short, they've like the whales have entered really good shorts for a very sizable move that likely blew out anybody else who was short. So we just got to wait. So this is a no trade. NEO is. All right. I'm going to now segue into the inflation discussion because I think this is very important. I'm going to start off with a question for you guys. Question for the audience. I'm going to take off the white background. Okay, audience question. If you had $1 million in 2010 and you had a CD rate of 10%, so you went to your local bank and the bank gave you a guaranteed 10% CD, where at the end of 10 years, so from 2010 to 2020, you would earn 10% of your money. Would you have, would that have been the best way? I'm trying to figure out how to word this. I probably should have thought through this better. Would you have made the right decision to take that bet? Essentially betting that you're not going to get better than 10% anywhere else. And accepting that you're leaving your money in cash, but you're doing it in a way to earn 10% over 10 years. No, not going to do it, says Tex. Any other bets? Any other guesses? I mean, a lot of people, especially the older generation, they're like, well, hell yeah, I get 10% guaranteed money. Hell yeah, now I'm going to take that all day. Well, let's see. All right, anybody else? We'll give it 2 seconds. Could be a good idea for low risk part of investment. Yeah, that's true. Of like a portfolio diversification. Okay. Very good point. Now, let's just see what inflation was between 2010 and now 2020. if you had $120, the value of your dollars, $100 today is worth $120 in 2020. Okay. Let me add the little chat box here so you guys can read that. Okay, there we go. So 100, what I've pulled up is a way to visually see and calculate what inflation does to your money over periods of time. Okay. Oh, the Streamlabs thing like scared me, that like block of text. If you had $100 in 2010, today, 10 years later, it would take $120 to be net the same thing. So if you had a 10% gain on your money from 2010 to 2020, you did not outpace inflation. In fact, inflation means you should have, just to keep up, just to be at par, just to be at even, not to make any money, but just to be at even, you would have needed a 20% gain over a 10-year period to keep up with inflation. That's what this is telling you. Okay? That's a big deal. So let's look at this another way. Let's say you inherited money because that money's been around since, 1950. You had a family member that struck gold or oil or whatever, and their ship came in and they've got $50 million that they gave you. Let's see. And, through the generations, that family gave it to their kids, and their kids are, which was like, let's say your grandparents got it, they gave it to your parents, now your parents gave it to you. They had it 50 million, it's still worth 50 million. They have it neatly packaged up in this bank account. It says $50 million on it. It's still a lot of money, right? And it's 50 million. It's like, oh my God. But look at what has happened in 50 years. It's coming up 60 years. $100 just to keep up with inflation. $100 in the 1950s is $1,000 today. So $50 million because of inflation. If you wanted to have the same purchasing power as $50 million in 1950, you would need $500 million today. Like, let that sink in. Inflation kills people. This is over time. This is what forces money to move. And in fact, this is by design. Our economy, the US economy, especially, and most countries, most every country will intentionally have a 2 to 3% inflation rate, because what it does is it forces you to buy the goods and, your favorite TV or whatever, buy it today, because you know, whether you know it or not, you actually know this from as a little kid, you pick up on it anyway, that your money today will not be worth the same as your money tomorrow. So even if your favorite $100 chair is going to be around for the next 3 years at the same price, well, $100 today, it will take more dollars to buy that chair next year, because that person will raise the price for inflation. It'll be $103 next year, and then $106, and then $110. Like, you follow what I'm saying? So it is by design that our economy wants you to buy things now and not wait. If in a deflationary economy, everything grinds to a halt and you don't buy anything, you don't buy a house, you don't buy any of that stuff, because it's going to be cheaper next year, and then cheaper the year after, and then cheaper the year after that. Like, you are incentivized to hold your money. But long term, you have to understand what I'm trying to show you on this chart, that over a 50 to 60 year period, $100 to have the same purchasing power, you need to have multiplied your money tenfold just to stay even. So when you see that stock market has gone up, 10x or 15x or whatever it is in that period of time, like, it is kept up and I think outpaced inflation at least a little bit, but it's not the same, and it's not as good as a lot of people think. So again, this is why I'm here, to educate and to get people to just start asking questions and like look at the money in your bank account a little bit different, and understand what's going on. And I'm trying to raise my kids the same way. And like, I have young kids that are in like early elementary school, grades, and I'm having this discussion of like, now you could buy something now, and kind of get into it with them, because I want them to understand this, especially if inflation does what I think it's going to do, which is a nice segue to the M2. The M2 is the number of dollars printed on a particular basis. This is the number of bills essentially in circulation. This is very common metric for people to look. And it is not the only way to measure inflation, but it is a way. And what you'll see if you actually measure it out is the number of dollars in circulation. It has pretty much gone up 2 to 3% per year. Like, and everyone knows that it's very fixed. We get it. Yeah, that's the norm. But since COVID, with all the stimulus packages and everything, we are up 22%. The number of dollars in circulations so far is up 22%. And there's another stimulus package coming, I guarantee you, because I work with a lot of businesses and they ain't back to normal. They're going to need something. So there's going to be another round of this. So inflation's going to be something worth watching. Now, I want to bring up one other point to go with inflation, because I deal with a lot of older customers sometimes, and I have a lot of wealth. Like I'm in some wealth management kind of stuff. And a lot of guys and gals are saying, well, I'm just going to put my money in a CD. Well, okay, let's see what CD, let's say Wells Fargo CD rates. All right, let's just see. We're going to go to wellsfargo.com, look at CD rates today, and see what they are. Oh, and it's shitting on me because I'm not going to give it my zip code. Oh, we can kind of see through it. Okay, so looking in the background here, you can get a 1-year CD for $100,000 or more, and you will get 0.01. You will get 1/100th of a percent return. At the same time that, where are you? I lost it. There we go. At the same time that interest rate, or that inflation is going up, where it's been roughly 20% in the last 10 years. Do you understand? So this is exactly this. Bitcoin is an inflation hedge. Bitcoin is why a lot of Wall Street either already does or will take the asset, Bitcoin itself, very seriously. Because I promise you, there are very smart people on their payrolls that have done this math, and they say, oh shit, if I can't even get a 1% return on a huge chunk of money on, like at Wells Fargo or my local bank or whatever, and I'm supposed to outpace inflation, what the hell am I going to do? Well, that is where Bitcoin comes in. And because it's proof of work, the amount of work that goes into it will only continue to rise. And a lot of times that is demonstrated through price, that the harder it is to move, to chug things along, to go block to block, the more valuable it is. So Bitcoin doesn't just go up because it's just some arbitrary thing that goes up. It is intentionally designed to help people counter this inflation rate. This is why people put their money here. Because you need a 10-fold return in 50 to 60 years just to stay on par with the dollar, with the inflation and what's going on here. Okay, so I'm gonna pause there as well. That was a pretty lengthy little segment. Any questions on that before I move on? No questions, no questions. Giving it like 10-15 seconds here. I know the delay gets kind of wild for some people. I've had some people tell me there's like a 30-second delay at times. Okay. 1 minute. 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 1 min I'm assuming no questions, so we're gonna move right along. A lot of you guys use TradingView. I know, I recognize, and let me turn. I just like this, it's like kind of a cleaner view. There we go. I wanted to let you guys know, if you right click anywhere on your symbols, there's a new option. It's called add section. So for example, I have like these little segments, things I'm watching. Okay, so now I can kind of move that around, and then I'm going to go right here and put other random garbage. How about shit coins? And I have that down there. And then down here, I have this stock, USD, inflation, and several metrics that I use. But this is something that TradingView has just added. It was a pretty handy little tool. So you can add this stuff and kind of categorize things. Maybe you're trading these things, and so you really only care about watching them, but you still want to kind of sort things around. And I think it's a pretty neat little feature. The VIX is something that I like to watch. The VIX is the volatility index for the US markets. And when it spikes, it's basically a fear sentiment. It's like a way to measure fear. Most of the time, that's what it is. It's not 100%. So we'll see what happens with that. But the last time the VIX really spiked was the 2008 financial crash, and then the COVID. But we may have some spikes, but again, I'm kind of thinking, even despite what like the headlines might be for the next week or two, I think the macro headlines, things are going to calm down after the election, and we'll see some kind of return to normal. Even though you're not going to see that, no one's going to calm down in the headlines right now, because everyone's pushing papers and clicks and likes and views and stuff. So it's going to come across as being like ultra scary and terrible, but that may not be reality. So another night I can get into a lot of this other stuff. The CPI is actually, this is the consumer price index. This is the true inflation tool. This is, I like to use the M2 a lot, but the CPI is actually what is used more times than not. And you can measure over periods of time how much things have gone up. So in 20 years, the consumer prices, so for like, you know, goods, milk, eggs, etc., they've gone up roughly 50%. So if your pay hasn't gone up 50% in 20 years, you have not kept up. You understand? If your savings account has not gone up 50% in 20 years, you're getting outpaced. You're losing money and you don't even realize it. In fact, that's why some very smart people have called inflation and economies with inflation a way to steal from the poor, because we can look at the minimum wage. I just want like federal minimum wage chart over time. Really have to add this? Okay. Minimum wage. All right. So in the 50s. Hold on. Let's do. Need to make my point very clear here. So in 1975, minimum wage was $2.10. What is it today? What did it say? Minimum wage today. $7.25. All right. So quick math calculator. $7.25 divided by. What do we say the 1970s were? $1.60. Okay, $1.60. So 4.5. So minimum wage has gone up 4.5 times. Okay, you probably see where I'm headed with this. 1975. What is $100 compared to today? It's 5 times. So even though minimum wage has risen through the years, it is still behind just a little bit behind what the actual value, like the actual purchasing power of the dollar. So over a long enough period, what you tend to see is like the minimum wage will continue to rise, but inflation will rise faster. And so people are like, well, damn, my grandpa made 50 cents an hour and here I am making $100 an hour. Like this is like 30 years from now or whatever. And I can't even make rent. I can't make ends meet at all. And this is why we're here. We're talking about this. So trying to rewire your brain to think like this. Total wave, we'll get into that here in a minute. Savings accounts. All right, so I'm going to move on past the inflation and the savings accounts and all that stuff because I think you get the point. Okay, so I have had a few people reach out to me and they're like, hey, I know that you're very bullish and you're expecting really good things, but how are you going to call the top? Like, come on, no one knows the top. And while I agree, I'm turning the chat thing on again because of the white background. It's like kind of tough if anybody says anything. While I agree, I was sipping that like that the whole time. Sorry, guys. I also think it's important to note that there are many metrics of ways to tell when we have, quote, peaked. And one of the really interesting ones that I love to show is the HODL wave. Now there's a number of ways to use this, but what you can see, like this is coins that move based on their age, based on how long they've been stuck or held in wallets. So I'll just read it so I don't like chop the description here. The colored bands show the relative fraction of Bitcoin in existence with the last transacted within the window of time indicated in the legend. The bottom warmer colors, red and orange, represent Bitcoin transacting very recently, while the top cooler colors, green and blues, represent Bitcoin that has not transacted in a very long time. Bitcoin's money supply grew from 50 Bitcoin to 18.5 million Bitcoin over this period of time, so the chart has been normalized. The black line shows USD price logarithmically on the y-axis, and then it's based off Glassnode, which does a lot of interesting metrics. But you can actually see when things start to move. And the idea is a lot of people will move their old Bitcoin from storage to be sold, which is why you see like a spike here. I'll leave it rested. You'll see a spike here. I'm gonna leave that rested too. You see some spikes in here. People are taking profit. They say, oh my God, I just watched it go from 200 to 20,000. Yeah, okay, I'm selling. I'm sorry, I love Bitcoin and all, but hell, that's 100x return in like a year and a half. I'll never beat that. I'm selling. So you see a lot of people doing that. So that is something we'll be watching. There are other things like, in fact, I'm going to pull up Glassnode because they have a really good, this is something worth logging into. I think I have a login, but I don't remember it right now. But this watches a lot of metrics where you can actually see how, like, if Bitcoin's moving to exchanges, and CryptoQuant, which I actually do have pulled up, does the same thing. CryptoQuant monitors all kinds of things. One very interesting one is exchange flows. So this is the amount of Bitcoin flowing either to or from an exchange. And the insinuation is when you see big spikes like this is someone like across all exchanges on this particular day, almost 300,000 Bitcoin went to an exchange. All right. And that lines right up with the COVID dump, where it went from like $8,000 down to 3,000 or 4,000 across about a week time. So you will see very similar things to this and I can't go back in time because I don't have the paid model. But I just wanted to show you guys, we will be able to monitor things like this and see like Whoa, okay. The hodl wave says a lot of coins are moving, and then Crypto Quant is saying a lot of coins are moving to the exchange. We just pulled a 100x the previous lows, the accumulated lows. Okay, you know, 1 + 1 + 1 = 3 here. That's top. That's top. And so we'll be monitoring things like that as well. Right now it's basically a lot of just sideways. There's a lot of various things you can take away from the charts right now. But what we really want to see is like a spike in one way or the other that grabs your attention. So like right now, November 3rd, the net outflow from exchanges was 56,000 Bitcoin. So 56,000 Bitcoin left exchanges today, which I bet no one has talked about this yet because this is literally just today. Like, let me zoom in right here. Okay, so this just happened. So which would be, yeah, this is very bullish. I was just making sure I didn't have my graph upside down here. So you can see at the start of this period of time. Hold on, can I blow this up? Zoom in. That? Yes, here we go. Here we go. Okay. In fact, I'll probably have to tweet about this. Get my tweets. During the COVID dump, 35,000 went in. Out of here. And just today, more than that moved off the exchange and the price closed above 14,000. That's pretty damn bullish. That's extremely bullish. Holy shit. Yeah, we're gonna be tweeting that here in just a minute. And then the last thing I wanted to show you guys, and we're coming up on an hour and a half of the crypto segment, so I know this was a lot, and if you missed it, I'm gonna go back and make a YouTube video of this, so in timestamp it, so you can go back through and kind of rewatch it or whatever. Or if you got questions in the future, you're happy to do it. The crypto fear and greed chart. This is really, really interesting to me because it will show you spikes of when people are super, super bullish or super, super bearish. And a lot of times the move is to counter trade it. So for example, let's just look at this. June 26th of 2019, it was ultra greedy. This is the greed and fear metric. So the greed would have been like up here, like there's nothing been higher in a long time. So let's just see what happened at June 26th or after. June 24th. Okay, so the assumption is it was like right in here somewhere. So literally the top. Okay, right? Do you understand? And then that was the top. Like that was your sell signal. If you trade that way. I don't, because that's just not something I've been watching, but I will. I will be watching it now, I guarantee you. At the same time, let's check like some of the lows. Okay, so March 28th. So end of March to early April, what did price do? End of March to early April. Early March, end of March. So like that period of time was ultra bearish. That's what this is trying to tell you. Like it couldn't be. Everyone was like, this is going to zero. Like that's the insinuation. And look, that was a awesome time to buy. So again, looking for top signals. This is something else we'll be watching. So this is called the Fear and Greed Index, the Crypto Fear and Greed Index. Okay, text in the chat. Election update, Penn and Georgia are halting vote count for the night. So no decide. Yeah, I assume there's going to be a lot of that. I suspect we're going to see a lot of that stuff tonight. All right. Any other questions right now? This is like just a kind of an overview of what we will use to call top, basically. Stuff we'll be looking at. right, so the next thing we'll do here in a minute, I'm gonna go get a coffee refresher real quick, and then we're gonna talk about some coins I have my eyes on. I actually have a couple trade setups that I think are really worth looking at. So let me go freshen up my TradingView sponsored mug coffee, and I will be right back. Tex, entertain the chat. Hold on, I'm gonna unmute you. Tex, you there?
Yo, I'm here.
Okay, entertain the chat. I'm getting coffee. Don't be too politically biased, you bastard.
All right. So one thing I just put into the chat. So it looks like there's a report that there's some counties in Pennsylvania that are going to halt mail-in ballot counting in the evening sometime soon. Oh, tell a crypto joke. I know no crypto jokes. But yeah, it looks like we will not have, or most likely will not have, a presidential decision tonight, if that's gonna be the case, with some of these things shutting down. So we might, who knows? May not need a couple of these states that are being talked about, but no idea. I'm not that smart. So does anybody in the chat happen to know a crypto joke?
Oh. What's up?
That would be a good joke. Kabina TV says, I think Dogecoin is the biggest crypto joke.
Oh my god. Hey, are you looking at my notes? Because that's the very next thing I'm talking about. Is Doge, actually. But before I do, you guys want to hear the best dad joke I've heard. You ready for this?
Go for it.
What do you call the wife of a hippie? Pause for effect. The wife of a hippie. What do you call her? Mrs. Hippie. It's funny because
nice.
I just yelled at like a state, the name of the
State,
state at
yeah.
you. Yeah, I like shouted it at you.
Yeah.
Yeah. Bro, slow down. You don't have to. Okay, you don't have to laugh so much. Oh my god. Okay.
I'm speechless at the fantasticness of that joke. It's going in the book. It's going in the book
the
for
joke
later.
Book?
Yeah.
Okay, good.
Hopefully I can get an eye roll from the kids when it comes time.
What is this grandpa? Kabina's little grandpa emote.
Get him, Kabina.
That's funny. Okay. So remember, one of the things I was just talking about is Buck Rogers. I see you in the chat, you dirty lurker, you. One of the things I was talking about before is how several alts are kind of hinting, giving a little foreplay that Bitcoin may attack its all-time high imminently, like very, very soon. And the whole reason I saw that, I went back and looked at how Bitcoin during the last election cycle, which again was November of 16, like right in here, it all of a sudden shot up within a 2-week period, 43%. I had never actually paid much attention to that. So I was trying to like combine, why do some of the alts look horny, but Bitcoin is still at 13.9, you know, like it is right now, versus being at like 18,000 or 19,000, you know, like being like right up there with it. And I couldn't make sense of it. So first I want to show you why I think some of the alts are looking a little bit horny. The first is, again, Litecoin, right? It had its little, draw this proper. It had its consolidation period that broke out. And this breakout occurred as Bitcoin broke out, as it attacked its all-time high, and then later went on to break it. And again, right now, we have a very clear... So there's not much room left, right? Like right here, there's not much room left. Okay, so that Litecoin is the big one. The second one that I noticed is Doge, right? And I'd mentioned that Cabina was jokingly talking about Doge. But look at this Doge chart and how Doge just kind of, it popped and then it just bled out for like ever and then found some support and it mooned, right? This right here is at Bitcoin hitting 20K, or sorry, hitting 11,000, 12,000, whatever the prior all-time high was, and then going up. So look where we are today. So that was 15 Satoshis at that time, and then it went up. We're like a few percentage points away. Actually, I'm curious, what is so 10%, 12%, but literally we're like within 3 or 4 Satoshis of being at that same line. So if you were going to trade Doge, and this is the trade setup. Hey, hey Buck, watching while working. Okay, I appreciate it, man. If you got any questions, thoughts, comments, whatever, I'm filming this particular session for YouTube, so this will be in my next video. And as a side note, chat, I'm going to start doing these educational type deals every Tuesday, and then the Thursday, Sunday sessions will be just gaming and stuff, because I don't have enough time to have like fresh educational content literally every single time and curate it for YouTube and upload it, blah, blah, blah. Okay, we'll get to that news here in a second. But I'm finishing this thought here with Doge. The prior support, so Doge is clearly breaking out or breaking down from what was this kind of support line, and now it's bleeding out. If you were going to buy at any point, literally it has no support below 17 Satoshis, 16 Satoshis. So option A is it bottoms out around the same time we attack the all-time high and it pulls this again, or something similar, where it finds its bottom and then moons, or it breaks to new lows and it just doesn't do that same move. But, you know, so you gotta figure out what you want to do there. It is a trade. It is worth looking at, in my opinion, and I will probably personally play this a little bit. But again, I'll never give up my Bitcoin stack. It's like a significant portion of that. Which brings me to the Bitcoin dominance chart, which is really, really interesting. So if for those of you that don't know, this is basically Bitcoin divided by the entire market cap. So like of the total market cap of all of alts, Bitcoin, everything added together, what percentage of that does Bitcoin make up? So back in the 2016 days, whatever, Bitcoin actually made up 98% of the entire crypto market. In early 2018, which is like the top for Bitcoin, when everything was kind of going crazy with ICOs and all that, any of you guys who were around during then, you know exactly what I'm talking about. The dominance dropped to 30%. But as you can see, it's basically slowly joeying its way back and kind of climbing. Like it keeps breaking up to new highs. Now, the question is, like this period right here, this was when Bitcoin broke its prior all-time high. So the question is, when Bitcoin breaks its all-time high again, the 20K all-time high, which will be you know, somewhere, I speculate somewhere in the next 4 months, 3 months if we're lucky. If that happens, then will it do the same thing? Will we have a new kind of alt season, which anytime this Bitcoin chart goes down, it's an alt season. So will we have a new one of those, or is this time different? Right? Because markets love to fuck you. So we'll see what happens there. And then chat's had a couple updates with regards to Biden and Trump. Looks like Biden took Oregon and Washington state, which was not expected, and then Florida. Trump took Florida, which I know that was, they had actually called that for Biden early on. So
that is actual news.
That's interesting. Okay, we'll see what happens there.
So it looks like it's about what is that? Hold on, math. Almost 4.5% for Trump in Florida. Cali, Oregon, and Washington going to Biden is not actual news.
Well, that was expected, or what?
California? Yeah.
Oh, California. Yeah. Sorry, I thought
Oregon and Washington.
Those I honestly had no idea.
Blue states, big blue states.
Got it. Okay.
So
I don't care. I don't care.
Yeah.
Politics. Oh my god. I mean, it's really
but
probably
it does affect some of this stuff here.
Yeah.
So that's why I'm just kind of keeping the update going.
Yeah, good updates. Chat, one other thing I want to talk about is, and you will see this across the board on alts, and Kabina, you especially, you had asked about, you know, what are we looking at for alts? While I do think there is some serious upside for things like Ethereum and a couple of the others, you know, whatever, pick your favorite alt, Link, Ethereum, whatever. I think there's some really nice upside to these things. It is very common during these shoves up to the all-time high that you will see, and it's hilarious because I remember this from 2016, 2017. Buck probably remembers this too. You will see the alt / Bitcoin will be like negative, like in the red. It'll be negative 10%, negative 20%. It'll be nasty. But then the alt USD charts are up 10% or 20%. It's ridiculous. And all it's saying is that the alts their USD pair is going up, but they are not keeping up with Bitcoin. So they're both traveling upward, but Bitcoin is traveling faster and harder. And so, like, on a percentage basis, they are losing. And it's crazy to see. Now, just like we spent a couple streams going back and addressing, it seems to be that the alts take off after Bitcoin breaks its prior all-time high, like concisely, you know, where there's no question about it. It's very conclusive. You don't have to think twice. You know, markets tend to rhyme, like we were just talking about. I suspect we'll see the exact same thing. Where, number one, Bitcoin breaking its prior all-time high is a signal that we're going to price exploration mode to the upside. And a lot of people, even like dumb money, you know, like probably your friends and family, whatever, they probably just want to be along for the ride. And if they're anything like my friends, they say stuff like, well, I want to own one of something and I only have $10,000, which is half a Bitcoin, you know, at the all-time high. I don't want to buy a half of something. I want to buy lots of something. So, oh, Ripple's only $1 or less, you know, whatever it is. I want to buy a shitload of those things. And that actually pushes the price up for a short period of time. But hopefully you will guide them and say, yeah, sure, ride that wave, you know, make some money, but understand that it will pull back and it will not keep up with Bitcoin on a long-term basis. So if you want to speculate and be a part of these wild 300% runs, you know, do it by all means, but don't buy into the hype that is the next Bitcoin or whatever the stupid comment is.
Those are weekly candles. Oh my God,
dude. Yeah. Ripple, when it broke out, it was a 58x on the Bitcoin pair. So if you put one Bitcoin in and sold it at the top, so February of 2017. So yeah, so that was right at the attack of the all-time high. I've never used Ripple to compare to the break of the all-time high, but it's the exact same thing as Ethereum, Litecoin, Doge, all the others we've looked at. as Bitcoin attacks and breaks its all-time high, that was like a huge signal for people to enter that. Yeah, that was, so you could have put 1 Bitcoin in and gotten 58 Bitcoin out, bro. Bro. And then people do that on margin. So they're like, yeah, 10x long. Okay, sure. Let's just see what happens. So now they have 580 Bitcoin from their 1.
Goo.
Nut. If I just made you fail your no nut November, I apologize. You know, that's just how it is sometimes. It'd be like that. Crypto be like that. But yeah, okay. All things being equal, and I think especially Bucky, since you're here, I don't know if you've seen this in my other streams or not, but the weekly 20 moving average is our moving floor. This is our escalator, and we're like kids jumping as the escalator moves up. That's what price action is. Like, yay, 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 and just kind of shoving its way as the 20 moving average goes up. But as you can see, back in the 2017 into 2018, every time it came back, the 20 weekly EMA was the floor. Literally was the floor. So if you're looking for like a margin entry time for Bitcoin, it doesn't get any better if you can catch it right at the EMA or maybe slightly after. But you can see in recent weeks, we did grind along it for about 5 weeks, and now we're breaking above it. So whether it comes back down or continues up is, yet to be seen. To me, this is a Bitcoin kind of no trade zone until we get some more signals. You should already be long. You shouldn't be closing your longs, in my opinion, but you shouldn't be entering some big sweaty margin longs right now. You don't have an edge here. You have a big edge playing this 20 weekly. You just may not get another chance for a while. It may be up in here by the time it happens. It'll happen. Okay. So Doge, EOS. I just wanted to show you guys how nasty this freaking chart is, and how the 20 weekly moving average can work the other way too, especially in downtrends or bear markets for Bitcoin pairs. As soon as it broke below, it has never gotten back above substantially, and stayed. It hadn't even gone sideways. So a lot of people have lost a lot of money on EOS thinking, well, that's the floor. That's the floor. Oh shit, yeah, I got it now. That's the floor. The same thing's going to happen to TRX, I'm telling you, because this is what we saw TRX do. We had a trade range formed, a break above, a break back into, and now it's like crapping itself. How long after the Bitcoin all-time high did the all-time highs hit? So they were kind of various. And so this is where you're just going to have to kind of BS your way through it. So, and let me show you. I'll show you exactly what I'm talking about. So Bitcoin. So let's look at this period of time from when it broke out till it hit the Bitcoin all-time high. So up here is the 20K Bitcoin. Down here is the 12K. All right, so let's see, like Litecoin. This is the first one we had pulled up. So we can look, and you see how as I move the cursor down below, it also moves the cursor up above, right? So the big breakout for Litecoin occurred right here. And actually, let's use Litecoin, do Litecoin Bitcoin, so we can see on the Bitcoin pair how that looked. Okay. All right, so we can see as Bitcoin was really breaking its all-time high, there was a massive bleed out. And then we attacked the all-time high, which is just essentially people are selling their Litecoin to ride Bitcoin up. They are riding this last little shove from, at the time it was $800 back to 1200. And I suspect you'll see many alts do this exact same thing on the Bitcoin pair. Everyone's selling their stuff for Bitcoin. And then as for the question of when did it hit its high, on the Bitcoin pair, it happened very quickly for Litecoin, actually. So it hit its all-time high within... We actually have a measuring tool we can use for dates. So from low to high was only 67 days, so about 2 months. Now, on the USD pair, which is also worth looking at for Litecoin, especially because it just kept chugging. It does, like, so you... Not to say if you left your money in, you would have gotten more Bitcoin, because it basically moved at the same pace as Bitcoin after a certain period. But the Litecoin low to high was almost a year. So the alt run mirrored the Bitcoin run for the most part. That alt's run mirrored the Bitcoin run. So let's see if you see, because like the peak was here at Bitcoin's peak, literally at the exact same time. Okay, so that was Litecoin. Let's check a few. Let's see like Ethereum. Where are you? ETHUSD. I'm moving this chart out because I already know. I've looked at this one before. Okay. So the low was in here. Again, right as Bitcoin hit its all-time high. This was people entering their positions. The attack of the all-time high. And then as it continued up, Ethereum climbed, pulled back kind of simultaneously with Bitcoin. And then its all-time high wasn't until after Bitcoin started selling off. So Ethereum's all-time high was when Bitcoin hit 15,000 on the way down, which is kind of interesting. So I don't have a really good signal for when an alt has topped, other than we can watch some metrics that we typically look at, like on-chain movement or technical analysis of like what's happening on a high, like on a lower time frame, excuse me. So for example, you know, we saw lots of bullish market structure, kept shoving up, and then here we have big nasty wicks to the downside, and it couldn't retain its prior high. Lots of attempts. So like in here would have been your sell signal, this 1200, especially when the daily closed below the level it broke down from. So what we would do from a TA level is you find where the breakdown was, you draw your horizontal, and you would expect it to break back if it's a continuation move or act as resistance. And that's like your local top. So Bitcoin did the exact same thing though, which is why I kind of point this particular pattern out. So Bitcoin started to dump, you draw your horizontal, it broke, but then it came back and actually gave it like an attempt. It closed its daily below it, and then after that it was just, that was it. So this would have been your big sell signal if you were still in a position, and that's at 17,000, and you should have been happy with that. All right, and let's see. So the takeaway, at least from two different alts, and we'll go through a couple more just to see, is that it almost mirrored the Bitcoin run exactly. So if you kept up with what the Bitcoin run was, that would be kind of your signal. So like right in here for Bitcoin, when Bitcoin was 13,000 to 14,000, somewhere there, NEO hit its top of 180 or 200 bucks, whatever it ended up topping out at. So that's pretty late after the Bitcoin top. So I personally do not know of a 100% way to know like how long to stay into a position and when to bail or whatever, but keep our eye on it. And then Doge Bitcoin, Doge was really quick. Oh, I did the wrong thing. I need that one as U, this one as Doge. Back it up. This big ass chart right here is what we're interested in. So prior all-time high is basically that right there. So Doge starts its uptrend right kind of in this big of a, like right in there. And then it ends its all-time high, at least on the Bitcoin pair, right in there. So again, the date range here, let's call it about 2 months, strictly from a Bitcoin perspective. And Doge pulled a 10x from the lows to the highs on the Bitcoin pair, an 1,000% move. And then it fully retraced. So you'd have to be careful. You know, that is your alt season window, I suspect. And this is, we're all kind of like picking this up as we go together. This is not something I've looked at, so great question, Buck. But this tells me that entering right as we're taking the all-time high and then selling at the first sign of kind of trouble, which this would be like 35,000 or so for Bitcoin, may be a smart move, especially, or at the minimum, watching for an alt spike like that on the Bitcoin pair. It's never sustainable to have stuff like this. So if you just happen to have like a moon bag and then look for something like that and then take profit along the way, you know, little sells, where the bulk of your buys were back in here, so you're not worried. And then you would average out, you know, somewhere in the middle. It would be like an 8x on average. I think that would be your best bet. That'd be the play. That's probably what I'll end up doing. I will move a portion of my Bitcoin into alts at the break of the all-time high, just expecting people to get excited for no other reason. Woo! Guys, I've talked for like 2 hours straight on Bitcoin and charts and stuff. Anybody got any questions? Any of that stuff? Jesus, my throat. You bet, Bucky. Thanks for being here, by the way. I should probably tell the other guys that I do this stuff. I never say anything to them. Arizona went to Biden, which is a flip from last election. Ah, interesting. Okay. Well, we'll see what happens. Even though I suspect there'll be some fuckery in the coming days, I'm still expecting. Remember, this is what it looked like during the last election period. Break it down to the daily. Turn off my EMA thing real quick. Hang on. This is literally what we looked like. Third. Some volatility. That's about a 7% drop. We could see the same thing. We could wake up in the morning and the entire market panic. But in the grand scheme of things, all it's really doing, or at least then, all it was doing was forming this macro signal, this rising wedge, which then broke up. And this was a 45% run in just a couple weeks at the end of the year. So I completely expect something similar. Could be dead wrong. I'm not margin trading right now. I don't think it's the time to do anything like that. But I do think that we'll see something similar. No crystal balls, you know, who knows? But that's my guess.